Welcome to the Riskwiser Zone, where we dive into the world of stocks and finance with a keen eye for detail and a commitment to fairness. I'm your host, Lewis, and we're excited to have you join us today. As we navigate the complex landscape of global markets, it's essential to stay informed and up to date on the latest developments. In our opening segment, we're focusing on the significant news coming out of Japan, where Prime Minister Sanae Takaichi's resounding electoral victory has sent shockwaves through the financial world. The Nikkei 225 index has surged past the 58,000 mark for the first time, extending its remarkable rally since Takaichi won the election on a campaign promising increased economic stimulus. This Takaichi trade has been making waves in the market, with domestic shares reaching successive record highs while government bonds and the yen have declined. As Wataru Akiyama, a strategist at Nomura Securities, noted, the sense of overheating seems to be intensifying, so profit-taking movements could emerge from here on. We'll be keeping a close eye on this development, as it has significant implications for investors and market watchers alike. Meanwhile, the earnings season is underway in Japan, with companies like Honda Motor and SoftBank Group reporting their results. While some stocks have seen significant gains, others have experienced declines, highlighting the importance of careful analysis and strategic decision-making in these uncertain times. As we move forward in today's show, we'll be exploring more of these stories and providing expert insights to help you make sense of the complex world of finance. We'll also be discussing the potential risks and opportunities that arise from these developments so you can stay informed and ahead of the curve. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're exploring the fascinating world of risk management and current events. Now, let's dive into our middle segment, where we examine an intriguing story from Australia. South Australia is making headlines with its impressive push towards renewable energy. The state has generated 84% of its electricity from solar and wind power in the final quarter of 2025, a remarkable feat that surpasses any other major grid globally. This significant milestone has contributed to a substantial decrease in wholesale electricity prices, with a 30% drop compared to the same period last year. The implementation of mega batteries has played a crucial role in stabilizing the energy grid and reducing reliance on expensive gas generators. These batteries are charged by adjacent solar and wind farms during periods of high energy production and provide backup power when needed. The success of this approach has inspired other Australian states to follow suit, with utility-scale batteries becoming an essential component of the country's power system. It's also worth noting that the increased adoption of home batteries and rooftop solar panels has enabled many South Australian households to reduce their dependence on grid electricity. In fact, over half of the houses in the state now have solar panels, and approximately 50,000 homes have installed home batteries. While there are still challenges to be addressed, such as managing surplus energy and ensuring a stable grid, South Australia's progress towards reaching its target of 100% net renewables by next year is undoubtedly impressive. As the world continues to transition towards cleaner energy sources, this story serves as an encouraging example of what can be achieved through innovation and determination. Welcome back to the Riskwiser Zone. We're closing out today's show with a look at some of the latest insights from Jim Cramer, where he shared his thoughts on several key stocks. From Coca-Cola to Datadog, and including companies like AstraZeneca, S&P Global, and more, Cramer offered a mixed bag of assessments based on their current performance and future potential. Starting with Coca-Cola, Cramer noted the retirement of its CEO, James Quincey, stating that he will be missed. This transition comes at a time when the beverage industry is navigating changes in consumer preferences and the impact of new technologies and health trends, such as GLP-1s affecting snack sales. Moving on to Datadog, Cramer described the stock as too expensive, despite it being nearly cut in half. he emphasized that while there are cheap enterprise software stocks available, Datadog isn't one of them, selling for less than 50 times earnings but still considered pricey in the current environment. Cramer also touched on AstraZeneca and S&P Global, mentioning their upcoming earnings reports amidst a backdrop of significant changes in the tech and healthcare sectors. For AstraZeneca, the focus remains on its pipeline and how it navigates the complex landscape of pharmaceuticals. S&P Global, on the other hand, faces challenges from powerful AI companies that are disrupting traditional business models. Additionally, Cramer discussed DuPont and CVS Health, highlighting the diverse range of industries reporting earnings this week. Each company presents unique opportunities and challenges, reflecting the broader trends in their respective markets. Lastly, it's worth noting that while these stocks have potential, certain AI stocks might offer even greater upside potential with less downside risk, according to Cramer's analysis. This reflects the ongoing shift towards technology and innovation as key drivers of growth in the market. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.